Stop everything. I need you to put down your coffee, close the door to your office, and turn off every single notification on your phone. Because what I am about to tell you changes the rules of the game so fundamentally, so violently, that if you do not understand it within the next few minutes, you are going to be left behind in the ruins of the old economy. It is Monday, January 19th, 2026. And while you were sleeping, while you were worrying about the weekend price action, the United States government just signed the death warrant for the COMEX. Ladies and gentlemen, Asian guy here, you're probably looking at your screen right now. You're seeing the paper price of silver hovering around 93. You're seeing the price in Shanghai trading at an absolute premium of 15.73. And you're probably thinking that that is the story. You're thinking that the $12 spread between East and West is the headline. You are wrong. That is just the background noise. That is just the symptom of a broken market. The real story, the one that nobody in the mainstream financial media is talking about, because they're too terrified to admit what it means, is that a new player has just entered the chat. For years, we have tracked the whales. We have tracked JP Morgan. We have tracked the Chinese Communist Party. We have tracked the Indian housewives. We thought we knew who the biggest buyers were, but as of this morning, all of them have been demoted. A new Leviathan has just surfaced, and it has a printing press that can print infinity. We are talking about the United States government. We have just received confirmation of a massive, unprecedented policy shift coming out of Washington, D.C. Buried inside the latest defense appropriations bill is a directive that should send a shiver down the spine of every short seller on Wall Street. The United States government has officially approved a $2.5 billion acquisition program specifically targeted at critical minerals to replenish the strategic national stockpile. And guess what is at the very top of that list? Silver. I need you to let that number sink in. $2.5 billion. Now, in the context of the national debt, maybe that sounds like a small change to you, a rounding error, a footnote. But I am here to tell you that this $2.5 billion is the single most bullish signal for a physical commodity you will see in your lifetime. It is not an appropriation for a study. It is not a feasibility grant. It is a direct, immediate, and urgent mandate to buy, to take physical possession, to pull metal out of the market and lock it away in a mountain forever. This is the United States Treasury, the same entity that backstopped the entire banking system in 2008, turning its full attention to the silver market. Think about that. The ultimate whale with the ultimate balance sheet is now a bid, not a speculative bid, not a leveraged bet, a national security bid. And when the U.S. government makes something a matter of national security, the rules of economics, of supply and demand, of fair play, they all go out the window. This changes everything. For the last decade, the entire narrative in the precious metal space has been a tug of war between the physical reality and the paper illusion. On one side, you had the relentless physical demand from the East, from China's relentless accumulation, from India's cultural affinity for silver, from the industrial juggernaut that consumes more of this metal every year in solar panels, electronics, and electric vehicles. On the other side, you had the paper markets in London and New York, the COMEX, where an endless stream of digital contracts of promises of unbacked paper could be created with a few keystrokes to suppress the price, to manage perceptions, to maintain the dollar's dominance. This tension created the split you see today. A physical price in Shanghai that screams scarcity, and a paper price in New York that whispers manipulation. That disconnect was the story. Until today. Because today, the biggest player on the planet, the architect of the very paper system itself, has just looked at its own strategic cupboard and found it bare. And in a moment of pure, unadulterated panic, it has decided it must become a physical buyer. Not just any buyer, but the buyer. This isn't China quietly adding tons through the Shanghai Gold Exchange. This is the United States of America announcing to the world through an act of Congress that it is entering the market with a $2.5 billion checkbook and a directive to fill a hole it didn't even know it had. Let's break down why this is an absolute earthquake. First, consider the scale. $2.5 billion for silver acquisition. At a paper price of $93 an ounce, that represents roughly 27 million ounces of silver. That's over 800 metric tons. To put that in perspective, the entire annual mine supply from the United States is roughly 1,000 tons. The U.S. government is signaling its intent to soak up nearly an entire year's worth of domestic production in one single program. But it gets worse, or better, depending on which side of the trade you're on. They are not buying from the COMEX warehouse. Those registered stocks, the pitiful few million ounces that back the hundreds of thousands of paper contracts, are a joke. They are a rounding error. The U.S. government needs physical, deliverable 1,000-ounce good delivery bars. They need the kind of metal that is sitting in LBMA vaults in London, in private depositories in Switzerland, and already on ships heading east. They are competing directly with the Chinese national stockpile, with the Indian jewelry manufacturers, with the German and Austrian refiners minting retail bars for a panicked European public. They are entering a market where visible, liquid inventory is at multi-decade lows, where the lines at the mint are months long, where premiums have detached from the spot price entirely. The US government just became the world's most desperate buyer in the world's tightest market. What do you think happens to price under those conditions? The laws of economics have not been repealed. When a buyer of last resort with infinite liquidity enters a market with finite shrinking supply, only one thing can happen: explosion. Second, consider the signal. This is not just about silver, this is a confession. A confession buried in a defense bill because admitting it openly would cause immediate, uncontrollable market chaos. The signal is this: the United States government no longer has confidence in the market to provide critical materials in a time of crisis. For decades, the Strategic Petroleum Reserve was the model. Oil was the critical resource. Now, in the age of electrification, of green energy, of cyber warfare and advanced electronics, the critical resource is silver. It is the most conductive, most reflective, most antimicrobial element on the periodic table. There is no substitute for it in thousands of military and civilian applications. From every single guided missile and satellite, to every single advanced medical device in a field hospital, to the control circuits of the entire power grid, silver is the irreplaceable lifeblood of modern technology and modern warfare. And the US government has just admitted by this act that its stockpile is inadequate. It has admitted that the just-in-time global supply chain for this metal is fragile, geopolitically compromised, and unable to meet the demands of a major conflict or a total breakdown of the paper market. They are not buying for profit. They are buying for survival. When the motive shifts from speculation to survival, the price becomes irrelevant. You do not haggle when you are bleeding out. You pay whatever is on the price tag. This $2.5 billion is the first installment. The down payment on panic. Once they start, once the bureaucrats and the defense logistics agencies realize how little physical metal is actually available at these paper prices, the program will expand. $2.5 billion becomes $5 billion. $5 billion becomes $10 billion. There is no limit, because the need is infinite and the printing press is right there. Third, consider the timing. Why now? January 2026. We are in the heart of what they call the Great Monetary Reset. Currencies are fraying at the edges. The BRICS Plus bloc is settling more and more trade in commodities, bypassing the dollar. The petrodollar agreement is a shadow of its former self. Central banks around the world have been net buyers of gold for 15 consecutive years, draining physical metal from the West and sending it east. The United States has watched its financial weapons, sanctions, dollar dominance, slowly lose their potency. It has watched its technological edge being challenged by a peer adversary that controls the lion's share of global refining and processing for critical minerals. This silver acquisition program is a direct response to that. It is a financial and strategic counterpunch. It is an attempt to secure the physical foundation of the next century's economy before the door slams shut. But the door is already closing. The metal has already moved. The East has been stockpiling for a generation. By launching this program now, the U.S. is guaranteeing a price war it cannot win with paper. It will have to pay up. It will have to blow the paper price out of the water to attract metal away from Shanghai, away from Mumbai. This program is the trigger. It is the official starting pistol for the final, chaotic reckoning between the paper price and the physical price. The spread of $12 you see today between London and Shanghai, that is nothing. That is the calm before the storm. Once the U.S. government's purchasing agents hit the phone lines to the few remaining bullion banks that can source large tonnage, that spread will gap to $30, then $50. Then it will become meaningless because the paper market will simply break. It will fail to deliver. The contracts will default. The COMEX will declare force majeure. And when that happens, the only price that will matter is the price of a physical bar in your hand. The U.S. government just told you that price is about to go parabolic. Let's talk about the immediate fallout, the April shock I mentioned in the title. The legislation is passed, the funds are appropriated, but the bureaucracy moves slowly, right? Wrong. When national security is invoked, the wheels spin fast. The Defense Logistics Agency has existing frameworks, existing contractors. They will move with shocking speed. We are already hearing from sources that RFPs, requests for proposal, are being drafted. They will go out to the usual suspects, the primary dealers, the bullion banks, the large refiners. But these entities don't have the metal. They have paper claims on metal. They have lines of credit and relationships. So they will turn to the market. They will start bidding. The first tenders will hit in late February or early March. By April, the reality of this new, insatiable demand will have filtered through the entire ecosystem. The miners will hold back product, waiting for higher prices. The refiners will have order books filled for years. The wholesale dealers will see their shelves emptied by a combination of sovereign buying and retail panic once this story breaks beyond the alternative financial media. April is when the quarterly reports come out. It is when the first delivery failures on the COMEX, prompted by this new competition for bars, will become public. It is when the $93 paper price will look like a nostalgic fantasy. April is the shock. The moment the system realizes it is structurally short several years' worth of production to a buyer who cannot and will not take no for an answer. This brings us to the ultimate implication, the end of the paper price manipulation scheme. For decades, the price of silver has been set in a largely dark, unregulated pool of paper derivatives that have little to no connection to the physical flow of metal. This has allowed certain large players to suppress the price, to protect the value of the dollar, and to disincentivize investment in a monetary metal that competes with government debt. That game is over. You cannot suppress the price of a commodity when the biggest, most powerful government on earth is a compulsive buyer. Every short contract, every naked paper promise is now a direct bet against the United States Treasury. It is a bet that the U.S. government will fail to secure its strategic interests. Do you want to take that bet? The bullion banks do not. They will cover. They will run for cover. The short squeeze that the silver community has dreamed of for decades will not be triggered by a Reddit forum or a retail buying frenzy, though that will be the gasoline on the fire. It will be triggered by the United States Department of Defense. The ultimate margin call is coming in. It is coming from the Pentagon. They are not sending an audit. They are sending a delivery notice. And when the paper holders cannot deliver, the entire facade crumbles. The default will cascade through the financial system, exposing the hollow core of the fractional reserve bullion banking system. Gold will ride silver's coattails to unimaginable heights. But silver, due to its smaller, more industrial, and now strategically vital market, will be the rocket ship. The gold to silver ratio, that ancient metric, will collapse from its current artificial elevation back to its historical geological mean, and then keep going. So what does this mean for you, the individual? It means the window of opportunity you have been waiting for is now measured in weeks, not years. The U.S. government has just validated every single thesis about silver's critical importance and its gross mispricing. They have put the official $2.5 billion price target on the dysfunction of the market. Your task is no longer to convince your friends that silver is undervalued. Your task is to acquire as much physical silver as you can in whatever form you can hold and secure before the government's purchasing program vacuums up the remaining liquidity. Before the premiums double, then triple. Before your local dealer's inventory is gone and he tells you it's a 6-month wait. This is not a speculative trade. This is a strategic repositioning of your wealth from a system of failing financial promises, dollars, bonds, paper equities, into a tangible, critical, and now officially recognized strategic asset. The ultimate hedge against monetary failure just became the ultimate hedge against supply chain collapse and geopolitical strife. You're not competing with hedge funds anymore. You are competing with the United States of America. And you have one advantage. You can move faster. Do not wait for the headlines on CNBC. They will come too late. They will come when silver is at $150, and they will call it a bubble, all while ignoring the sovereign elephant in the room that caused it. Do not wait for your next paycheck. Do not wait for a pullback that may never come. The $2.5 billion program is the pullback. It is the last warning siren. The government is telling you, in plain language buried in a legal document, what is about to happen. They are telling you the market is broken. They are telling you they are scared. They are telling you they need what you might still be able to buy today. Listen to them. The old economy, the one built on debt, derivatives, and the illusion of infinite paper substitutes, is in its final days. Its death warrant was signed this morning. A new one is being built on tangible resources, on energy, on things you can hold in your hand. Silver is the key that unlocks that new economy. And as of January 19th, 2026, the biggest player in the history of the world has just reached for the same key. The race is on. The question is, will you be left standing at the locked door, holding a paper IOU, or will you have the key in your own possession? The choice and the limited time to make it is now yours. The whale has surfaced. The tidal wave is coming. Get to high ground.